Welcome to Kitco News. I'm Niels Christensen. Joining me today is Lisa Davis, CEO of PearTree Securities. Today we're going to be talking about something that's transformed, I think, the mining industry, flow-through funding. In a nutshell, what exactly is flow-through funding?
First, thanks for having me here, Niels. It's great to be able to talk about this topic, which is very near and dear to my heart. Flow-through funding is actually a really simple concept that's been around for decades. It's a way for high-risk capital that junior exploration companies desperately need to raise through an incentive that was created by the Canadian federal government. And it's simply an acquisition of common shares, but because these companies are not revenue producing and are spending a lot of money on exploration for which they have no revenue against which to write off their expenses, they can issue flow-through shares, and the shareholders are then entitled to have the expense associated with the money that's raised flowed through to that investor. And so these investors would be people in the highest tax bracket in most cases. And so they get that expense once the money is spent by the company on exploration, and they can write that expense off against their own income tax.
Is it? But it's also for charities. Like, it's also money raised for charity as well. Like, some money can go to charities.
Yes, so there's been a real evolution in the world of flow-through financing over the past probably 10 or 12 years. When PearTree got into this business, we really sort of pioneered a new format whereby flow-through shares were used by philanthropists who purchased them and donated those shares to charity. Charities which had been expecting to have a donor make good on a pledge, but didn't want to be stuck holding illiquid shares of a junior company. So this is sort of a turnkey arrangement whereby the charity then gets liquidity immediately. So we arrange the whole thing. So rather than just have a regular subscriber buy the shares, we arrange for a subscriber who's a philanthropist to purchase the shares. The shares are then donated to charity. The charity knows it has an immediate exit, so it receives proceeds of sale of those shares immediately. And what that means is that the charities receive funds that are needed for a lot of great causes, and the donor is able to make their charitable donation at a decreased after-tax cost. And a really nice thing about this is that rather than donors saying, well, if I was going to give $100,000 to Sick Kids Hospital or McGill University, for instance, and it's going to cost me a third after tax relative to what a cash donation would cost me, rather than saying, okay, I'll make my $100,000 contribution and it'll cost me less, they'll very often say, I'm going to make a $300,000 gift, which is, really transformational for a lot of charities.
So, it's very much win-win, mining companies, the explorers get much needed capital, charities do get, they get charitable donation. How transformative has this been for exploration companies? I don't think I've ever heard of a deal that has not included some flow-through funding.
Yeah, well, I really think that the junior end of the market would be just crippled without this tool. I mean, exploration capital for grassroots programs is venture capital at its riskiest, and without an incentive like the flow-through regime, the sector would just be starved for capital. I mean, as it is, the markets have been very challenging for anything in the commodities area over the past number of years. But I know that there are statistics that are kept that we have, which show that pretty consistently over, let's say, the past decade. If you look at all capital raised on Canadian exchanges for Canadian exploration purposes, somewhere in the range of 70% is raised using flow-through shares.
Wow, I didn't think it was that high. How has it grown? Like, I mean, like it's been around for 10 years. It now represents about 70% financing. That's wow. That's way bigger than I thought. Do you know, like millions, like how much do you think has been, how has it grown over the years?
Well, it's not so much that it's grown, it's how it's changed. So, I mean, you know, whether we have flow through or not, we're sort of subject to the kind of other macroeconomic factors and commodity prices and things that, you know, have made capital raising for exploration in the mineral sector difficult. So actually the amount of flow-through funding that was raised going back to about 2011 was significantly greater than what we see today. So that's in part how the donation arrangement format has become really important, because by introducing donors as subscribers who have a different agenda, we've been able to price the offerings for issuers in a way that offers a premium to the market prices they'd otherwise get, allows them to raise money with less dilution, and at the same time, because there has to be this ultimate liquidity for the charity, end buyers have opportunities to get in at discounted prices. And we've really opened up a market which had originally been a market strictly for retail Canadian resident investors, because only individual Canadians can make full use of the tax benefits that are attached to flow-through shares. By introducing the charity format, what we've done is we've been able to allow issuers to maintain the value associated with flow-through funding, but we've expanded the universe of buyers to include anyone globally, institutional, strategic, who is able to buy at the back end of this structure. So while the overall market of flow-through share financing has contracted because of factors that, you know, are beyond certainly my control.
Market conditions, yeah.
The proportion of these transactions being done has been sort of turned on its head from having what we refer to as the traditional flow-through funds doing almost all of these transactions to those like PearTree, who provide donation arrangements, being responsible for the greatest part of the market. And a lot of that, as I said, has been expanding the pool of buyers, because really the ultimate investors in these are the ones that end up purchasing the shares from charity, and that's a much expanded group of investors.
Where do you see this going in, I guess, the next 10 years? I mean, I don't think this is, you know, flow-through funding isn't going away anytime soon, especially market conditions haven't really improved for the explorers. Is there another evolution to this?
Well, we're seeing some evolution now. Frankly, I'm not that happy with some of what I'm seeing. It's a small market. There's only a few players. We at PearTree, we're really proud that we have sort of founded this business on something that is both helping the mineral exploration sector access desperately needed capital, but at the same time, we've done so much for great charitable causes, and we have a lot of devoted donor clients who are trying to access, you know, what is our sort of our supply chain, being flow-through share issues. And we're starting to see some other groups involved in this doing more of this, where they're actually not using charities, they're just doing a transaction where the shares are being acquired.
You get a discount on the share price.
Right, and so what that's doing is it's you know, there's a relatively sort of small pool of shares available for this. So every share that's used just to sort of make a quick after-tax profit on a day trade, essentially, is being removed from the pool of shares that could otherwise be used to to be put towards charitable causes at the same time as it's raising capital for junior companies. So that's a trend I'm seeing that I'm not that happy about.
Do you think you can stop it? Like, I mean, would it take like lobbying from the government to change laws, or is it just like people like making an effort of don't dealing with those firms and dealing with firms that are actually devoted to helping charities?
Well, I think right now we need a little bit more transparency. I think these are sort of recent changes. There's a couple other things where I don't think people understand how these transactions are put together well enough, and they're lumping them all into sort of one group. And we hear a lot of companies now talking about ESG, environmental social governance, and how important that is. And some of the issuers we've worked with have been very complimentary and very pleased to be able to participate in something where they see that sort of giving back to the community side of it, and the social and the ESG sort of that agenda being met. And I think that companies don't necessarily know the difference. So I think right now, what we need is just a better understanding, a better transparency of how these transactions are being put together, and letting companies, particularly in broker deals where they tend to just say, I've hired someone and they can make whatever choice they want, like letting companies have more of a say in what's going on, and meeting like the agendas that are important to them.
Last question, probably difficult to answer, but I mean, do you have a sense of how much money has been raised for charities through this financing? Like, do you have a million ballpark? Is it?
It's hundreds of millions. Yeah. Over the years, I mean, there's a bit of it's not a one-to-one ratio, like the subscription proceeds equals the donation amount. But I would say that, PearTree alone has been responsible for, at least a couple $100 million going to charity, and that's money that is really, it wouldn't necessarily be there. So, like I said at the beginning, we're very proud to have a business that's founded on those sort of philanthropic foundations, and the fact that we can, meet the two agendas of helping, a really important sector that's starved for capital and improve access to capital for charities is great.
And it's really funny because you don't think of mining as responsible like having responsible ESG policies and promoting charities. Like you just sort of you hear the dirty side of mining, the mineral extraction and environmental stuff like that. So it is nice to see that. It's nice to know that mining companies are actually also doing their part to sustainable social development.
Yeah, well, I wear another hat in this sector as a director of the PDAC, and I find it very frustrating that the general public does tend to focus on negative sides, and the Canadian mineral sector is extremely responsible, and the PDAC has worked very, very hard to set high standards, and I think has a reputation globally as being a standard setter when it comes to responsible practices, and there's lots of good stories to tell.
And this is one of them. So thank you very much for joining us. Thank you very much for watching Kitco News. Tune in for more coverage.